Hi guys, welcome to this Money Control live stream. You're tuned into IPO Watch with me, Nandita Khemka. Well, today we are focusing in on Ceigall India, which is a Ludhiana-based EPC contractor and has launched its IPO. Now, it is primarily into road and highway projects, has more than 2 decades of experience in construction, and has evolved into a national highway developer. Now, with NHAI as its main client, now it would be a beneficiary of the government's infrastructure push as well. So let me now bring on board, Ramneek Ceigall, who's the MD of the company, to take us through the roadmap for the company post IPO as well as its expansion plans. First of all, Mr. Ceigall, great to have you here on Money Control. Congratulations on the IPO. You've already raised 375 crore rupees via the anchor book, and I can see some marquee names that have participated. The likes of Nomura, SocGen, Morgan Stanley, and even from the domestic, mutual fund space, we have ICICI Pru, HDFC Mutual Fund, Axis Mutual Funds, etc. How has the response been to the IPO so far, and how confident are you that it will sail through?
So thank you so much, Nandita, for having me over. First of all, I'm really thankful to the investor community. They have really welcomed us so well, and you've seen the marquee names already there in the list. And good thing is that they like the story, they like the management, and going forward, they can understand our plans. So the last year, our ROE was close to 33%. Our CAGR was about 50%. So a company, normally if you see the construction company will be based either in road or something, whereas our company has so many verticals. We are into roads, we are into railway, we are into runways, we are into elevated roads, we are into utility shifting, we are into tunneling, we are into metros. So there's so many verticals within the company. And besides that, we have about 10 states. We have already present. We have touched upon 13 states already. So we were very clear with the thought process. We are not in any rat race. So we want to do something different out of the box. Our order book value is currently 9,400 crores. And going forward, we've already quoted for tenders worth 16,000 crore. And, we don't have any pressure of getting orders. With 3,000 crore turnover, we've done this year, close to 3,000 crore. We already have 3.2x of the order book value in our hand. And, we are at the right spot in terms of the budget also, because there's a great budget in terms of the infrastructure. So, for a company like us, investors can really look forward that this is the company way to invest to. And we've got a great response also. Thank you. And secondly, I want to tell you one more thing. We're a national award-winning company. We've already won 2 national awards. A+ rated company by CRISIL. We entered into HAM business in 2020. We've already completed our first HAM project, so 8 months ahead of schedule. We already got bonus. So EPC, we've got bonus in 2 projects. HAM, we got bonus in first project. Our first HAM project is AAA rated by CRISIL. So, we're a company with mix of HAM, EPC. HAM is about 40% government gives us at the time of execution. 60% is paid to us in 15 years, 2 installments per year, about 30 installments in totality. And that's such a great model for companies where they give us the balance amount plus escalation plus interest. So the equity IRR are there. Typically, when we quote, it's about 15%. And now, once a project is completed, company like us who has a USP of completing projects before time, we do a lot of value engineering that the equity IRR goes to 20%. So, we make sure as an entrepreneur, the ROE has to be the best. So we really concentrate on that. At the time of bidding also in EPC, we make sure we have to concentrate on our 2-digit EBITDA levels. That's for us.
Right. We'll talk about the financials in just a bit. I want to understand, you will be using a part of the funds that you are raising via the fresh issue for repayment of debt, right? So tell me, after the debt repayment, what would be the residual debt on your books, and how much are you looking to save in interest costs?
So interest cost would be around 40 crores per year. And the debt would be negligible in the company, which is Ceigall India Limited. And going forward, the way things are going, with this IPO proceeds coming in picture, right now our single tender eligibility is 5,700 crores in EPC, 5,500 crores in HAM. We are going to, of course, the net worth will increase with this new IPO coming in picture, and Ceigall will be 2.0. So, our bidding capacity will grow, and way forward for, getting more HAM projects, larger HAM projects, visibility to the banks will be better. We have a track record of completing projects before time. So it'll be a great mix match, and it'll be, we are a young company. Sky is the limit for us. We just started. We always say we don't compete with the companies under $5 billion. Then it's L&T, which is $70 billion. There's so much of vacuum in the market. The sky is the limit for a company like us. Thank you.
Well, sky's the limit. So NHAI is one of your biggest clients, right? How has the tendering activity been on that front, and what are your expectations for the current fiscal?
So NHA has been what 80% of order book value, and we backed close to about 6,000 crore last year also, and this year also I think the way government has planned, the roadmap is very clear. We are really looking forward to it, and but we have not restricted ourselves to only NHI. We have so many departments. We will really looking forward to railways. We're really looking forward to airports. We're really looking forward to dedicated freight corridors, metros. So for an example, I'll just say we have quoted for one of the longest metro of the country, which is Agra Metro, which is 1,528 crores. We are just doing one of the longest four-lane elevated of the country, which is Bihar, for about 1,969 crores. And before that, we have completed more than 95%, one of the longest six-lane elevated of the country, which is about 1,500 crores. So eligibility, and I'll add one more thing, 60% of order book value is from structure work. So typically, we are going into specialized work, specialized structures, elevated roads, metros, and railways, dedicated freight corridors, airports. So for us, we have so many verticals, and bagging new orders and moving into these fields related to our business is not very difficult.
Tell me, I was just going through your order book for the last three financial years. It was at somewhere around 11,000 crores in FY23, but then we did see a bit of a slowdown, right? Because it became sub 10,000 in FY24. My question is, what really led to this deceleration in the order book? And of course, we were talking about how much of it is really comprising of HAM, and how much of it is from EPC. So going forward, would the mix change, or would it remain largely the same?
So, good question. So the order book value we are getting also, and revenue is increasing. So if you see from 2022, when it was 1,000 crore, now it is 3,000 crore. So that means every year we're doing 3,000 crore. So that means if it is 9,400, our order book value went up to 12,000 crore. That's the reason we've done 3,000 crore. And going forward, the mix of EPC and HAM would be something like what we have. It is between 30 to 40% HAM, 60 to 70% goes to EPC. But we only plan and bid as per our beta levels. That's more important for us. We only concentrate on our beta levels. And for HAM, minimum IRR we look forward is 25% of the project level. So that way, our mixed bag is good. We will be concentrating on this and getting orders like this only.
And what about the book to bill ratio? What is the ratio now, and what are you targeting going forward?
So it's 3, and going forward will be good only. We will be keeping this at least.
Any challenges in terms of execution that you're facing? Because I think the net cash from operations were negative for you. So in terms of execution, how are you really viewing things going forward?
So if I talk about 4 years back, we bagged almost 5 years back, we bagged almost 10 projects worth 140 crores. Last year, we bagged 5 projects, so average was about 1,100 crores. So what I want to tell you is that number of projects have decreased, but size of project has increased. So execution capacities, of course, 4 years back, we were at 1,000 employees. We are now 2,500 employees. So going forward, the employees are growing, the company is growing, verticals are growing, and project size is growing. And the second question, I missed it. Can you repeat the second question?
I was saying that are there any challenges in terms of cash flows?
So, okay, one more thing. I think you are looking at the cash flow of the console level. If you look at the company level, there is nothing negative. There's all positive, positive, and positive. And Ceigall has always created a positive cash flow. So why company level negative? Because we have HAM projects. In HAM, 40% is paid at the time of execution, 60% is paid in next 15 years. So that is minimum, that is only at the console level. But at the company level, everything is super positive.
Okay, and in terms of ongoing projects, I think if I'm not mistaken, you have 18 ongoing projects, right? Yeah. Are you confident of completion on time, before time? How is it looking like?
So first HAM we completed 8 months ahead of schedule. Second HAM we have completed more than 80% in about 11 months. So you can understand what is our execution speed. So our USP of Ceigall is completing projects before time and getting bonus. So we are so well placed in terms of execution that we make sure at the time of appointed date we are 100% mobilized and we are in action.
Right. I think there's some issue with the feed. I think it's fine now. A couple of more questions. In terms of your margins, they have been on an upward trajectory, 17% or thereabouts, if I'm not mistaken, for FY24. But do you have a timeline in mind to achieve that 20 or above 20% margins going forward? How many years or, how much time would it take for you to get there? And any levers in place for that?
So, we have a minimum target of about close to 15%, which we always target to bid and get tenders. And after certain level, where like, for example, I want to take tenders for 3,000 crore. Once I have the 3,000 level, then we increase the beta level. But, considering this, the average mix would be closer to what we'd been doing before also. And maybe we go into new verticals where irrigation water, it might increase. But again, futuristic saying something is not correct at this moment. We, as a company, has been always conservative. We've been, updating about lesser numbers than we've been living more. So I really want whatever I'm saying, we should deliver more.
Right, and any diversification plans going forward to reduce your dependence on the road segment? Would you be? I think you mentioned irrigation. Would you be looking at scaling that up in a big way?
So good thing about Ceigall is what companies or peers they started doing when they were at 6, 7, 8,000 crore. We have started doing it when we were 2,000 crore. So we already have about 10, 11 verticals already with the company and a presence in more than 10 states. You see other peers, they have restricted themselves geography. Koi UP mein hai, to koi South mein, or koi Maharashtra. We don't have such restrictions. So that is an edge for a Ceigall. Whereas for our growth plan, for us going to another 10 states also is not a challenge. Going into the new verticals which are already related to our work. Like for example, we are building a highway or building a elevated or a metro. We do a lot of utility shifting, which has water, sewage and everything. So getting a project in water sewage is not a new thing for us. It is just we are doing about 400 crores a year. Maybe we get a tender for 1,000 crore only for water. So it's like that. So we already have expertise doing that work. It's just the size of the work increases.
Right, and lastly, any message to your prospective shareholders?
So, I would only say one thing. I've started from a very small town, started about 60 lakh turnover, but done about 3,000 crore. It's been more than 25 years I'm with this company. Ceigall will be 2.0. Ceigall, the journey is yet to start. And sky's the limit for a company like us. We are a young company. And I would just say one thing. I have been so very well welcomed by the investors community. I'm really thankful to them. I've been really thankful to you guys also. Since I was a kid, I used to hear aisa hota hai, aisa hota hai. I have come to that stage after the hard work. I really feel how they have welcomed me. I'm overwhelmed.
All right, and let's hope that you have a great listing as well. So I would like to, wish you all the best for the listing, and of course, look forward to touching base with you once your stock lists on the exchanges as well.
Thank you so much. Thank you so much.
Thanks
Thank
a
you
lot,
once again for having me over.
Sorry?
Thank you. Thank you so much for having me over.
Okay, always. Thanks a lot,
Bye-bye.
and of course, all the best.
Thank you
Well,
so
with
much.
that, of course, we've come to the end of this edition of IPO Watch. Thanks a lot for tuning in, but you guys stay tuned to Money Control for all your other news and updates.